tuning into our webinar today on all things about forbearance. Let me introduce myself. My name is Edwina Winter, and this is my colleague Kelly Lang. We are both realtors associated with Coldwell Banker, and we work in the Columbia area of South Carolina. We decided to create the South Carolina Home Resource Center because we wanted an educational tool for people interested in all things about real estate and for homeowners to find useful. I think most people own property or are interested in property, so we're hoping this is going to be a useful place for people to visit. But the topic of real estate is becoming more and more complex as time is going by, and we want to help people to be able to navigate current issues and other topics so that they can actually get to where they want to be, and actually have a good outcome for their situations.
So we're hoping the SC Home Resource Center becomes a place for really good information about real estate issues and processes, and to give you some local resources to help you be confident in home ownership. Our homes are one of the biggest investments that we make, and we spend a lot of time in them with our families and with friends. So today's webinar is to cover the very, very current and kind of thorny issue of forbearance, and then we're going to talk a little bit about foreclosure and short sale as well. And we've been asked so many times over the last few weeks about this and what is it and what's going on with it, that we decided that now's a really good time to bring in some local experts to give us some information.
So we're thrilled to have two of those local experts with us today. And I'd like to introduce Matt Sullivan. He's an attorney with Harvey & Bellini based in Lexington and is very active in the real estate side of transactions and processes, and we realtors rely on him a lot for help and advice. And I would also like to introduce Ben Blanks, and he's from the Residential Home Funding Corporation, independent local mortgage broker, and with over 20 years of experience in the business. So welcome to you both, and thank you for giving up some of your Sunday afternoon to explain to us and to everybody all of the issues that we want to talk about today.
Pleasure to be here. Thank you.
Okay, let's get down to our first question. The words mortgage forbearance. It's been used a lot in the news, a lot amongst friends and family. So Matt, can you tell me what forbearance is?
Yeah, so forbearance is an agreement between a lender and a borrower where they agree to forbear or to pause payments being made on a mortgage. There's not one size that fits all. It varies from loan to loan, from one lender and mortgage lender and borrower. But it is some type of an agreement between the borrower and the lender to pause the payments for a certain amount of time.
Okay. And Ben, maybe you can answer this question. Is forbearance a forgivable debt?
No. Forbearance is nothing more than an agreement, like he says, between the current owner, lender, and the person that owes the debt. That the person who's owing the debt is acknowledging the fact that they cannot afford to make the payment right now. And the lender is saying, I understand this, we're going to work together, we're going to come up with a plan to allow you to pause making those payments while whatever temporary adjustments you have to make can be made, and then we'll start that over again based on the contract they have.
Okay, so Ben, what's the repayment situation with a forbearance?
Forbearance, it depends on the servicing company that currently has it. The most common we see right now with everything going on is they're giving a 60 or 90-day forbearance, and they've got choices at that point that they agree to with the lender, where on that 4th month payment, you make the 4th month and the 3 months you miss, or the part that's been paused for those 3 months is divided over the next 12 months equally, and you make those payments. And then we have some I found that are actually taking those 3 months payments and putting them on the back end of the loan. So on your 4th month payment, you're making the regular scheduled payment you would have made if you had not gone into this forbearance. But instead of having 29 years left, you have 29 years and 3 months left on that loan.
Okay.
And I think to get in now, we've found a lot of what people are hearing about the CARES Act, right? That's what Congress passed. That's what took up a lot of time in the media. And one of the big issues in the CARES Act, which obviously covered a whole slew of different aspects of the economy, is mortgages and what's going to happen to individual residential mortgages. And we have different forbearance rules under this CARES Act. And we really need to differentiate. I think that was a good time, since we're talking about forbearance terms, is what type of loan, say someone is watching this webcast, what type of loan do you have? If you have a federally backed loan, that's the FHA loan, that's the Freddie Mac, Fannie Mae's, the VA loans, USDA loans. You come under the CARES Act, and you have certain protections that Congress has passed. And as we've discussed before we went on air, we don't know what all those protections turn out to be because we're waiting on the courts to tell us. But there are certain requirements. So for instance, under the CARES Act, if you have a federally backed or federally owned mortgage, you're going to be able to apply for a forbearance, and your requirements to qualify for that forbearance is maybe less than if you have a private, non-federally backed one. For instance, all you have to do under a federal backed mortgage is show that your ability to repay is being negatively affected because of the coronavirus. Whether you've had it, whether you've had a loss of your job because of the coronavirus, or a loss of hours, which has resulted in a reduction of income. So the qualifications are pretty much, that's it. The lenders can't look beyond that. And then you get a 180-day forbearance period, which the lender has to give you. And then if you're still in the same situation, you're supposed to be able to apply and qualify for another 180 days. And the lender's supposedly not allowed to look beyond your coronavirus reason for the forbearance. If you're not in one of those federal loans, then we start getting to what Ben's going to talk about, and it's a different situation. So the first thing I would advise people who are watching is you need to look and see, what type of loan do I have?
Right.
Yes.
And we touched on it. We have servicers and we have owners, and who you pay is your servicer, but who ultimately owns your mortgage may be a different entity. And I can speak personally in my mortgage. I have a servicer called Senlar, which is one of the nation's largest servicers of mortgages. That's who I make my payments to every month. That is your servicer, who you make your payments to. But my mortgage is owned by Freddie Mac. I just got bought by Freddie Mac, so I would have a federal mortgage. So, but you may not.
And one of the things, if you're familiar with what used to call or is called a non-QM loan, they're we'll call it privately or non-government backed mortgages that are out there. One of the things I've heard from people that have those mortgages when they call their companies is they're giving them basically three options, or they're going to give them one of three options. And the way it's been described is if you go to the doctor and you have a cold and you just have to ride out that cold, or you go to the doctor and you're sort of sick, but you need a little bit of medicine, but you don't need the heavy antibiotics. That's step two. Or you're in dire need and you need the shot antibiotics, you need it all. Well, the first one's going to be tough it out. We're not making any forbearance or any change for you. The second one may be you're going to make your principal portion of your payment, but we're going to put the interest portion on the back end of your loan, or other options. And the third is, you can't afford anything, we're going to give you a forbearance under certain restrictions. So it's up to the individual servicing company. If it's not the federally backed, then it's not buyer beware, but protect yourself and make those calls to your lenders. It's very, very important.
Okay. So it seems to be really strongly about the message is talk to your lenders,
Yes.
find out what your current position is, and then make a decision as to what the best circumstance for you is.
And I think the first question to ask is, what type of mortgage do I have?
Yes.
That's the first question you have to ask. Do I have a federal mortgage?
Right, it's interesting. So Ben, maybe you can explain to us how being in forbearance, or having gone through the forbearance process, affects your ability then to either refinance or
Purchase.
get a mortgage in the future.
It does not positively affect it. Let's just start with that as a negative on your loan. I've had two cases coming in this week. One was a refinance and one was to purchase a house. Both of them we cannot do. If your loan is in forbearance, you are not allowed. We cannot make that loan to you. You're not going to get a loan. One of them, it wasn't even, he was renting, had a piece of rental property out of state that was put in forbearance, and he couldn't buy a house here in South Carolina because of that. Now, in this situation, he didn't even realize he was in forbearance. He actually called to inquire with his lender about it, and they went ahead and put him in it.
And he didn't even know.
He didn't even know it, and he's actually sent his payment in. So the thing there is, it's on the credit report, and it says forbearance. So now he's going to have to jump through hoops to try and get it removed so that we can possibly allow him to buy a house later on. But the forbearance is, you've agreed that you are unable to make your payment. And if you're unable to make your payment on your current situation, how can you make the payment on a new situation?
Right.
It is the beginning, it is not foreclosure, but it is the beginning steps of a pre-foreclosure. and that is not a good word to use in the mortgage industry.
Right.
So if you felt that you were absolutely desperate, can you apply for forbearance only in this current sort of 3-month period due to the CARES Act, or can you, if in say August you got coronavirus or lost your job then, can you apply to go into forbearance at that point?
I believe you can apply for forbearance whenever you want to. It's not something you can't apply now, next year, whenever it is. It's up to the lending or the servicing company. But right now, the government's basically put it out there that it's going to happen for you if it's in these parameters.
And one of the things we've talked about before we've gone on the air and preparing for today is, I kind of joke, there are a lot of lawyers that are not transactional attorneys, but litigation attorneys are going to make some money because we're waiting on the courts to decide what's going to happen with this act.
Right.
Congress writes a statute, courts interpret it. Right back to 3rd grade U.S. social studies. Congress makes the laws, president enforces the laws, courts interpret it. And we need the courts to interpret a lot of aspects of this CARES Act, especially when you have an act that's done so quickly.
Right.
The staffs that work in Congress that actually draft it can't think of everything when you're trying to do something so fast. So we have a lot of issues that we're going to be waiting about. And when we touch on some of them already, like we're talking about, you asked the question about, well, what is this about credit reporting? Well, if you have a federally backed loan, and you come under the CARES Act, and we talked about, you can apply one of the aspects of that is going into forbearance under the CARES Act on a federally backed loan is it's not supposed to negatively affect your credit. Well, what is that going to mean, not negatively affect? Okay, so maybe my credit score doesn't go down, but is my credit report going to reflect that I have a mortgage that's in forbearance and now I can't get a new loan? Well, that negatively affected me because it was on my credit report as being in forbearance. It might not have affected my score. I can see a lot of attorneys lining up to get courts to interpret that. So we don't know what the answer is going to be to that.
We don't. And everybody who worked on this and put it together, we were in dying, still are, where everybody lost their job. I mean, millions and millions. And so we needed help immediately, and that's what they did.
Yeah.
Boom, together, let's help, let's get it out there, let's stop the bleeding, but we haven't gone beyond that, which is what they will do later on to try and correct some of the things that they missed in the beginning of what this is going to actually do.
So if you are in forbearance and, for example, the mortgage company tax those payments onto the end, are you in forbearance forever?
Technically, yes, you're still in forbearance, but is it going to stay on your credit report? Because I don't know. We don't know how that's going to play out. But we know right now, if you've agreed to forbearance, you are not allowed to purchase, or you're not going to get a traditional government-backed loan for a purchase or a refinance, which is really sad because rates are so low right now. People can take really strong advantage of what's going on.
So you're saying that if somebody chooses to do forbearance or is in a position that they need the forbearance program and they can't make the payments up front at the end of forbearance, or they can't tack it on to the next 12 months because they've been out of work and they tack it on to the end of their mortgage, that forbearance could be on their credit report for the lifetime of the mortgage?
There is a strong possibility, yes.
That's one of those questions that's going to have to be
Yeah, it's
answered.
gonna have to answer. I mean,
wow.
is it going to be where it shows in forbearance the whole time? Or I can't answer that question.
Right, but there's a possibility.
There's a possibility, and even if you come out of forbearance, you pay it off, and you're now current, there is a time period that must be waited after that before you're eligible for a current mortgage.
Wow.
Okay, well, that's interesting.
And again, I could see some attorneys lining up to say, well, no, you can't, because the CARES Act said you can't negatively affect credit. So
We'll just
we're gonna have to wait and see.
see.
And I don't want to, and I am not being anti-lender here because, as we discussed, the lenders are facing some significant issues. One of the things we have to understand, we don't think about is on the residential side as consumers, because I have a mortgage as a consumer, not lawyers. The secondary market. There's a whole secondary mortgage market that is especially crucial to South Carolina, or a state that's not necessarily one of the richest states where we need capital coming in. We're dependent on that secondary mortgage market. And what we have is, most people have to understand their loans probably have two different entities. Who they pay every month is their servicer, right? So I have a mortgage settler, that's who I pay every month. Then you have the owner of the mortgage, in my case is Freddie Mac. Well, the issue that's going to be coming down the road rather quickly this year is going to be, if you don't make your payment, because you're in forbearance, you might be you've got an agreement, you're in forbearance, they're not going to foreclose on you, you're not going to lose your house, you've got a valid forbearance. And let's say I was to do that, which by the way I'm not, Senlar, don't mark me in forbearance. If I was in forbearance and Senlar agreed, Senlar's still contractually obligated to pay the owner of my mortgage, Freddie Mac. So we have all these servicers out there who are now beginning to realize we have a situation we've never had in the residential mortgage market right now, where we have a extraordinarily large percentage of borrowers who are now going into forbearance, who are not making their payment, but the servicers still have to pay on to the owners of the mortgages. So now we're facing a possibility of a couple months down the road of the servicers not having the ability to pay the ultimate owners of the mortgage. So we have another crisis
Where they're
coming.
looking at either a bailout or some type of forgiveness, or, and we do not want the last option where they hop out of the market completely.
Right.
Because we're seeing that a little bit now in some of our pricing on our government loans, and those pricings are increasing because there's less competition for that
Right, because
product.
they're actually physically unable to fund new
They
mortgages.
don't want to, they don't want their cash dry, like a lot of them did back in 08. They cannot do that.
And you've mentioned, we did a temporary fix, to address the consumers, and we pushed it down the road a little bit, which we needed to do. I mean, I would agree. But the problem is now is we've also not just pushed it down the road, we've transferred it on to the servicers. And the lenders have every right to be really nervous. The servicers have every right to be nervous right now. I mean, it's, if they're not healthy, then we're not going to have any new loans. We're not going to have any loan origination. So this is much.
Tentacles everywhere, isn't it?
Yes, yes.
As
It
the
goes very deep.
ripples expand.
Yeah.
Goodness.
So, Ben, you talked about how forbearance is I don't want to use the words pre-foreclosure, but it's a step in the direction of foreclosure.
Yes.
So, Matt, can you tell me what the foreclosure process is in South Carolina?
Sure, absolutely. First thing is foreclosure is a state process. It's not a federal law by and large. I mean, there's always federal laws on certain things, but it is a state law driven purpose. So it can vary from state to state. In South Carolina, we're a judicial foreclosure seal. So unlike some certain other states, the lender's not going to show up on your corner of your lot on a Saturday morning and auction off your property after advertising it in the local post office on the wall. Hey, this property's up for sale. They're going to have to initiate the process by filing a lawsuit against you. Just like any lawsuit. It is a type of civil lawsuit. They're going to initiate it by filing a complaint. Then they have to hire a process server and serve that complaint on you. So if you're the defaulting borrower, you will be served a complaint. And then you have 30 days under the rules of civil procedure to file what's called an answer. It's a legal document where you respond to the complaint. You can either say, that's wrong, I deny it, let's go to court and fight it out. You can admit to the complaint, or you can admit to some and deny others. And if you deny it, you're going to end up eventually getting a court hearing or a trial where you will actually, the plaintiff will go in and try to prove their complaint and get a court order. And if they're successful, they will get a court order where the court orders the property sold at an auction. And the auctions in South Carolina are run by the courts. So I believe it's the first Monday in Richland and Lexington County where we're sitting. We're almost, I forget.
We're in
Richland here. And I live right around here. I know the county line goes right through
Right
here.
on the line.
But in Lexington and Richland County, they have them on the first Mondays of every month, not, assuming there's not a state holiday on that first month. I mean, a federal holiday on that first Monday or a state holiday. And they will sell 80, 100 properties in Richland County, I know, because I've been there a couple times, on that one Monday. And the judge conducts the auction, and people can bid on it and what have you. And it's not an easy way to make quick money because they're professional investors, and most importantly, the lenders are usually going to bid the amount of interest. So, but that's the process. So, what I like to say is a foreclosure lawsuit goes quicker than maybe a car crash lawsuit or something of that nature, but I don't think most laypersons would consider it a very quick process.
Okay.
Most lenders are not going to initiate a foreclosure on, if you don't make a payment on July 1st, you're not going to be served with papers on July 20th. It's not going to happen.
Right.
It's not economically beneficial to the lender to initiate a lawsuit and incur all those legal fees and legal costs and so forth. So what they do is they're going to try to reach out to you and come up with something.
Multiple times.
So you're looking usually 3 or 4 missed payments before they initiate the process. Then they have to file a complaint, so they're going to have the time where their attorney drafts the complaint, files it, gets it back, then has to serve it on you. Then you have 30 days to respond.
Wow.
And then even if you don't respond, they'll go forward with a default hearing, but that's still going to take 30, 60 days to get on the court calendar. Then they'll issue the court order, and then they'll eventually schedule a hearing. So it's probably, in not doing foreclosures, at least probably 9 months, I would say, around before they're actually gonna foreclose on you, maybe even longer. There's one myth I wanna touch on real quickly to finish my thoughts on this. There's a myth out there, people say, well, I'll file bankruptcy, and that comes with this whole other issues, but I'll file bankruptcy and that'll let me keep my house. That will slow up the process.
Right.
Because bankruptcy is a federal action, federal courts trump state courts, and when you file bankruptcy, any action being brought to you, against you by any creditor automatically stops. It just automatically has to stop.
Right.
But because a mortgage is a secured loan, they will get the bankruptcy, what we call the bankruptcy stay, which means the bankruptcy court stays or stops everything. That bankruptcy stay will be lifted, and they'll be allowed to go forward with that foreclosure. So if you think you can file a bankruptcy to stop a foreclosure, no, it'll delay it and it'll add more months onto it, but it's not going to
So you'll
stop
have
the
a
foreclosure
bankruptcy
process.
and
Yeah.
foreclosure.
Yes, yeah. So, and that gets to the whole credit issues and all that, which Ben is much better than me to speak about.
And that's
But
not where we want to be.
No,
We
no.
don't get into that.
No.
But I do want to address that myth that bankruptcy's not going to stop it. But that's the general process.
That's really useful to know, because I think, for me, it sounds like the foreclosure process is a process that you're not in control of. So therefore, you will try and do something to stop it if you can.
Typically, by the time you get in foreclosure, if it hasn't been a single act or something outside of your control that's now that you can correct it and move forward, you're trying to figure out how to stay and you're doing anything you can, but you're out of control at that point.
Right.
You want to do things before it gets to foreclosure. You want to be in control of your own
And
destiny.
the only way you get in control at that point is to come up with all the money and pay off the mortgage.
Right.
Well,
Or-
are there some options that you
There
can
are,
use?
there are options that if you can't work it out with your current servicing company, and you see you're going down that road, either you're slowly just drowning in debt, you can't make these payments, be aware of your situation, understand it and stay in control, and talk to some agents, that know what you can do and find out what the value of your property is, and maybe at that point sell the property and move on, and that's something y'all can talk about. And there's different options there.
Yes.
And that's what I meant. I didn't mean to say. I'm saying when you're at the point where it's deep in foreclosure in your court, that's what I mean. The only thing you can absolutely know work is to pay it off.
Right.
So what I think we need to convey is before you get to that point,
Do
you need to
something.
reach out to your lender. You need to communicate with them. Don't pretend that this thing is going to disappear by itself. Reach out to the lender, and that's the big thing.
So Ben, maybe you can explain a little bit about, people will then say, okay, so we have no hope of actually getting out from under this debt. So would it be sensible then to maybe start talking about a short sale? Maybe you could explain a little bit about the difference between foreclosure and short sale.
So what you're looking at, if you get in a situation, let's say you go through a forbearance, and they are going to give you the option of no payments for 90 days. And at the end of that 90 days, they're going to take whatever you owe, and they're going to divide it by 12 and add that to your current mortgage payment. That sounds great, and everybody believes they're going to be able to do it, but how many people can add $400 to mortgage payment and not miss a beat after being laid off or furloughed or just back to work with reduced hours? There are going to be some people that just cannot afford what's going to happen. And if that's all the mortgage servicing company is willing to do for them, then eventually they're going to run out of money, they're going to start missing their payments, and that's when they're going to see things start going south on them. They shouldn't do that. What I recommend is be in control of your own situation. A lot of people lost a lot back in 2008 when all this happened with the mortgages and the restructuring and everything that happened. Don't let the economy dictate your future. You dictate your own future. So if you see that happening and you feel like you have some equity, go ahead and protect it. Talk to an agent. See what you can do. Maybe you do sell now. Go rent for a little bit, save it, regroup, and then go back and buy again. And that way you've saved your credit, you've saved your financial situation, and you've bettered your situation in the future versus letting the economy and something that no one can control affect you for the next 7 to 10 years. When we talk about selling, if you get with an agent and you realize that maybe you owe more than it's actually going to be able to sell for based on the market right now, which that's not a lending thing, that's definitely an agent thing. And it does move. Every month it moves. Then there is an option called a short sale. And that's basically another negotiation with your current servicing company. And that's saying, I've got a professional helping me, I've got a situation, this is what they believe it's going to sell for. Would you be willing, if I owe $100,000 and I'm only going to net 95 after I have to pay everything, taxes and transfers and all that, would you be willing to accept 95 and give the new buyers a clear title on this house?
Right.
And that's what's really important, because a short sale is still a ding to your credit, but it is nothing like a bankruptcy or foreclosure, and you have a very short period of time to wait before you can reenact and go get another house and just restructure your whole family life.
And I was worried, you know better than me, I deal with your underwriters on the title issue,
Yes.
but you deal with the underwriters on qualification. You know, my understanding, and I think you would say, and I know it's more complex than being as simple as I'm about to say, but generally speaking, if you've been a seller in a short sale, you might not qualify for another mortgage for 2 years, or if it's bankruptcy or foreclosure, 7 years. So it's a
Yes.
huge difference.
It's a huge difference, and there's little caveats in there too, where if something happened that was as out of your control, and typically up until this point it's been a medical situation where your family came down with a cancer, and you can verify and doubt this, or there's a whole company layoff in a town or something, and you can document what's happened, that time period can be shortened because of that circumstance. It's not often that way, and I'm not sure how we would look at something like this, but if this happens and you sell your house 2 years from now, go for a short sale, I don't think you can relate back to this because you were not proactive. So what I want everybody to do is be proactive, take control of your own situation, your own finances, and realize that bad things happen to good people. And that doesn't mean we stick our heads in the sand. That just means we strap them on and keep on going.
So, did you have?
I was going to add something to the short sale, since you brought it up,
Yeah, right.
from someone who does real estate transactional work, who's closed a number of short
Yes.
sales. I think it's important to realize for real estate agents who might be watching, we're now dealing with 3 parties to the transaction. And that's something that, if you're not a very experienced in the real estate industry, you might not realize yet. And it's not just the buyer and the seller have to come to terms. That lender who is going to be paid off, you have to understand, they have a say in this contract. The buyer and the seller can agree to everything, but if the seller's lender says, no, we're not accepting it, well, the only way you go forward is the buyer's gonna take a property that has somebody else's lien on it, and they're gonna, so, you have to get that lender has to approve it, so, and it varies greatly from lender to lender, how quickly they're going to approve it. You know, it really does, so you want to, if you're the agent or who's representing the seller and you're the seller, you wanna get out in front of that right at the beginning and get the lender involved.
And I think the sooner you make this decision, obviously, the more equity you may have if the market starts tanking a little bit, or the market may trend back up a little bit. And that's where the agents come in and just sort of give you where the market perspective and forecast is going to be. I can tell you what happens on your credit. I can tell you what it's going to take to rebuild it and to get a new loan. You can go through the process of what it's actually going to do, but it's up to y'all to give them the guidance on whether it makes the most sense or not now or 6 months from now.
So it sounds to me like the advice that we're getting right now is communicate,
Yes.
and also try and protect equity that you have. And it's better to withdraw now whilst you're controlling the situation than to allow circumstances to overtake you, and you could be in a seriously bad place for 7 to 10 years.
That brings up a great thing that I've actually helped some clients with in the last 2 months. If you feel like you have equity in your house and you're in a good financial position right now, but you're not sure what the future is going to hold, there is the cash out refinance where you can pull some of your cash out of your house. And with the current market rates where they are, I've got customers who are pulling cash out and they're increasing their payment from maybe $10 to $100.
Wow.
And so they're taking that money and they're not going to buy new cars or anything with it. They're just sticking it in a savings account because they don't know what's going to happen. Because even though it's not affecting us now in your current industry, it may affect them later. And you know, we all talk about, I heard this somewhere, if your neighbor loses the job, it's a recession. If you lose it, it's a depression. You know? So yeah, that's so true. And it doesn't mean that just because your industry is doing well right now, it doesn't mean that's not going to change 6 months from now with everything going on, because we really don't know what's going to happen over the next 6, 12, or 18 months. We do know we're all going to make it out of here, we just don't know how we're going to be making it out of here. And that temporary thing makes a huge difference there. So education, knowledge, communication, protect your assets.
Really good.
Yes.
And the advice I want to give, if you're talking about summarizing advice, first day of law school. If it ain't in writing, it didn't happen.
Right.
So when you're negotiating anything with your lender, when you're negotiating a forbearance plan, you know, we're going to agree to do this, you're going to agree to do this. 2 things. You want it in writing, And it's not bad to get an attorney to review it, to put it in layman's terms. Nothing I'm saying today replaces the benefit of getting legal advice for your situation.
Right.
There's nobody that I'm giving legal advice to today, because I don't know anybody who's watching this webinar situation. We're talking big picture. So, you know, to get an attorney to be able to look at it and say, this is what this agreement means, and the only way they can do that is have it in writing. So you always want it in writing, and you want to understand what you're saying, or what you're signing, excuse me.
Yes, because if you're talking to somebody at your servicing company and they sound nice and very educated and knowledgeable, but it's not in writing, 3 months, 5 months from now, when this comes back up, that same person may not be there because you may be just talking to a call center. Have it in writing, make sure it's reviewed, very, very important.
So now we communicate, we have it in writing, and we take control of our desk.
Correct.
I think those are 3 very, very good things to have in mind.
Right.
So,
So I think yeah, that's been really good. So just a couple of last questions
Sure.
really to make sure that we've covered everything. So you know, do we know, do all mortgage companies have the same forbearance policies? We're talking about find out what type of mortgage you have. I'm assuming each individual company will have its own policies to how we communicate with them, what they're willing to do.
Yes, I think that we'd love for everything to be uniform across the nation, and it's not. It's just not. I think hopefully every company has the same policy for all its own servicing, but we don't even know that. So talk to the servicer, negotiate the best thing you can, because it's a negotiation. A forbearance is a negotiation. It is basically it's an agreement between 2 parties.
It's a contract. Or it's a contract modification of the original contract between the borrower and the lender.
Yeah. Okay.
And I think this goes back to your question, Edwina, it goes back to one of the first things we said in this webinar is understand what type of mortgage you have.
Right.
Because if you have a federally backed mortgage that falls under the CARES Act, in some certain policies when you call, so it might vary from lender to lender, but you got certain federal protections that every lender is supposed to be following. If you have a private or non-QM, I think you called it, then you're dealing with a negotiation where they can vary significantly from lender to lender.
Good point.
And one thing follow-up I wanted to add up is if we're talking about private mortgages, there are some webinar, because we're talking about South Carolina, there's some viewers of the webinar who might have a South Carolina housing mortgage loan, South Carolina housing.
yeah.
If you have one of those loans, they have a forbearance program. So that's not a federal loan, but they do have one. It's not a huge percentage of people who have that type of mortgage. But if you find out that you do, go to the South Carolina housing website and check what their a little more requirements to qualify for forbearance. I think it's a little more documentation than maybe is required with the CARES Act. But if you've lost your job, if you've had a significant reduction in hours and that has affected your income, you might qualify for forbearance under that mortgage program as well. And right now you can qualify, I believe you will get 3 months, and then if you're in the same situation, you get another 3 months. So not quite as long as the federal ones, but you can get up to 6 months again, and that might be all you need. Right? We don't know where we're going to be, as we keep saying.
We don't know, and the ultimate goal here is to get relief, get better, and move forward. And it's just which way do we do that? How do we go about doing that to protect yourself, your family, your assets, and then your neighbors if you can? By educating them and talking to them about what's going on. Everybody's in this situation. Some are affected more than others. But the one thing we can do is talk to everybody and figure out and not be embarrassed about the situation and stick your head in the sand and lose everything. Talk about it, get the information, get the education, and move forward.
Great. Oh, that's excellent advice again. So, Matt, one last thing. We've talked a lot about the legal issues. Are there any others that you think we haven't covered that people should be aware of in terms of forbearance, foreclosure, and what they should also be thinking about?
And we touched on short sales. So,
Yes.
I mean, I think we've touched on...
You feel we've
We've covered a good
Okay,
chunk of
good.
it. You know, it just gets back to the basics that we touched on 2 minutes ago. Writing, consult an attorney. One of the resources I haven't mentioned yet, if, you know, some people might say, oh, who might be watching might be saying, oh, that's great. I'm going to hire an attorney. We know how much an attorney costs. I'm going into forbearance. How am I going to get an attorney to be able to do this?
Yeah.
The South Carolina Bar has resources. Find a lawyer. If you go to the South Carolina Bar website, they have a find a lawyer page on their website. They have help for people who maybe need a reduction in the costs. Start there. You might be able to get an attorney who's willing to review the agreement and explain it to you for a certain fee that's manageable for you. So I definitely would turn them on to the South Carolina Bar resources that are available through the South Carolina Bar. There are lawyers there that are willing to help you, especially when you're in an economically distressed time. So, you know, the joke about the lawyers aside, lawyers do want to help. I mean, there are lawyers who are dedicated to helping people who are in this situation.
I think most people want to help somebody else. And if you've got the knowledge or the resources to help, most of them will. So take the advice, go on their site, talk to them, protect yourself, and don't be afraid to ask questions.
Right, I think that's an important point. We are all in this situation. We all have friends and neighbours where everybody's struggling. So don't be afraid to ask, because it's not going to go away. So, and there are excellent resources out there, and I think that's a very good point.
Yeah. So, Ben, I know this is going to be a tough question, but what do you think is going to happen to home equity?
Well, let me go this way. I'm not sure if the market values are going to go up or down.
Right.
I can guarantee you they're going to do both at some point in time.
Absolutely.
That's what I can say.
Yeah.
We're watching right now.
Right. from neighborhood to neighborhood. That's,
Yeah.
you know, but what I can tell you is that the credit market has already tightened up enough to where you used to get home equity lines of credit to 90, 95%. A lot of them pulled it back to 80 again. You know, we've had some lenders I can do cash out lending with, others I cannot. They don't allow it anymore. And these are big servicers. So what's happening now is it's tightening up, and it may even get tighter. Eventually it will open back up again, but if you don't take advantage now, or at least explore your options, the one thing I think everybody thinks about in life is the things you regret, or the things you missed out on because you just assumed, and that just gets you in trouble. Don't assume, make a call, one of us, anybody that can help you with this. But I do believe right now, getting credit is tougher than it's been. It's not impossible, but it is tougher because it's a daily change with people's employment, what's happening. We're opening back up in South Carolina a little bit. That doesn't mean all the hours are coming back. It doesn't mean we won't close back down certain things 6 months from now. We don't know how this is going to play out. So we know it's going to change. But right now it's much tighter than it was 6 months ago for sure.
Right.
And I see it in the transactional side of it. I know it's changing. I'm not even talking to you just because you guys, lenders, are putting more forms in the package now where at the closing table, you're having to certify, you meaning the borrower, are having to certify at the closing table that you have not had a change of circumstance because of coronavirus. You haven't lost a job, you haven't been told that you're about to be furloughed or laid off, so
You don't have future knowledge.
that's all about tightening the credit. So it's there. I mean, those forms are being added to, and then you guys are adding 5 minutes to my closing time.
Unfortunately, he is 100% correct.
You're not blameless though. On the title side, we're adding it, and the title insurance side, more forms too. So it's just unique times. You know, it's just,
Absolutely.
Well, that's been really interesting. Any last comments that either of you think that we've missed, or you'd like to reiterate?
you know, I just highlight on everything. It is times we haven't seen before. At least for someone who's been practicing for, I'm in my 16th year of doing real estate work or property work, and you know, when you see the first loans to dry up were jumbo loans, which are loans given to the richest people, and you start reading and investigating and why they're not giving loans to the richest people anymore, you know, wow, that's weird times. You think those are the most creditworthy people of all time, but because those loans are not federally backed, lenders are not willing to be left holding the bag on a $2 million loan now for some rich guy who makes an economic decision to walk away from the loan. So, you know, it's unusual times, but communication, if it hasn't been written, it might not have occurred.
Right.
And knowing you do have options, and it's always better to get out in front of it rather than, you know, the day before, you know, 10 months down the road, you get the notice that in 2 weeks your house is being auctioned off. That's you're not left with many options. You're just not left with many
And
options.
I think one of the biggest things that we've said in this is that people are willing to help.
Yes.
There are people out there willing to help as long as you're willing to come and ask.
I do. From you know, when you said over 20 years, I actually started residential lending in '93. So it's I've seen it, you know, when there's typewriters and all that sort of stuff. But
Wow.
the one thing is we're all going to make it out of this. and there's going to be ups and there's going to be downs. Credit's going to tighten, credit's going to open, market's going to go up, market's going to go down. What your job, the individual, the consumer should be is to protect your own assets and what you've worked hard to do. And to do that, you need to open up yourself to talk to the professionals about what's going to happen, what could happen, and not assume because you got a mortgage 2 years ago that that's the same. Or assume if you get past me and we didn't find out that the attorney's not going to ask questions at closing, that you're not going to have to. And even if you happen to say something that's not completely true at closing, that can come back to bite you in 6 months. These loans go on and they're still audited, and this is a global thing that you have to be
I mean, I think there's a myth out there that the only way you can be foreclosed on is not paying your mortgage, and it's not. There's a lot of things that can result in you being foreclosed upon, and not that anyone watching this would be in this situation, but if you lie at the closing table and they audit your file and find out that you lied on some of your paperwork, that's an act that could result in a foreclosure. That's a whole other thing we're not touching on right now. We're talking about not being able to make the payments and so forth. But for the point of when you get to the closing table, I'm going to ask you when you're signing. I'm going to say you're signing here that you haven't been in bankruptcy or foreclosure in the last 7 years. You have no tax liens or judgment liens against you. Told the truth about your assets, income, and liabilities. You're American citizen in the country legally, and you're not currently being notified that you're going to be laid off. And you're going to sign, and you're swearing under penalty of perjury to Uncle Sam that you're telling the truth on those documents, and they find out down the road you did it. You're going to face consequences. So
obviously be honest in everything, but ultimately, we're all going to make it out of here. We really will, and it's going to be good, and we're going to thrive. Again, markets will go, credit will open, jobs will open back up, but between now and then, rely on your professionals, and thank y'all for having us here. Very much so. And protect yourselves.
Right. Well, I think that's
yeah, you and I both survived the crash in 08. We stayed in early. There are people out there watching. We'll get through this. It's a great industry. I'm a firm believer that as the housing industry goes, America goes. It's always been shown since the early 20th century. We come out of recessions. We're pulled by the housing industry out of recessions as a country. The housing market in South Carolina is actually doing pretty well. So I'm optimistic that when we come out of this, because the housing market is, this will be a short-lived recession, and we'll hope. I mean, no one knows. The best prognosticators don't know, but we're talking a lot of negatives, but there's a lot of positives. There's a lot of positives.
And in the meantime, keep communicating, ask the questions, and people are here to help you. So that's really good. So, well, I think we're out of time, and that's been extremely informative. I've learned an awful lot.
Oh yeah, me too.
So that was really good. So thank you so much to both of you for giving up your time and spending it with us this afternoon. This recording will be posted on the South Carolina Home Resource Center Facebook page, so if you want to look at it again, please do. We will share it with the neighbors. We'll share it, whatever you want to do. There will be some information sheets coming out that you can ask for. Either just message us on the Facebook page or send us an email on the South Carolina Home Resource Center @gmail.com email address. And we're hoping that maybe in a couple of weeks' time we can follow up if there's more questions.
Sure. Absolutely.
And please keep checking in on the Facebook page, because we'll keep posting information as we find it and that we hope is useful, as will both of these two gentlemen who will help us. So.
And we want to thank Great Southern Homes for letting us use this beautiful model home in Livingston Place in Irma to host our webinar.
And I think that's about it. So thank you, everybody. I hope people have found this informative and useful. Feedback's always appreciated, and we hope to speak to you soon.
Bye, everyone.